Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. Today is September 23rd. And let's get into today was a bit of a turnaround Tuesday. And that's a term that has been thrown around in, market for with market participants for quite a while. From what I understand, it had some of its roots in the equity market. Now, Tuesday is the perfect day for a positive change in market sentiment in bearish markets. For example, investment firms tend to close their positions to take profits on Friday. They also close positions to have money available for potential client withdrawals received over the weekend, etc. Retail investors get cold feet and then sell the positions after the weekend on Monday. And investment firms try to exploit market drops by reopening positions on Tuesday. So we saw a little bit of that, or at least the what appeared to be something like a turnaround Tuesday today in the markets. We saw quite a bit of positivity. But what's interesting is that the term turnaround Tuesday actually even goes back further than when inside the markets, which on March 9th, 1965, Martin Luther King was going to march along with 2,500 people from Selma to Montgomery, Alabama. However, a judge had ordered the march to be postponed. I mean, this was a friendly judge, at least to the civil rights movement. Uh, However, but instead, Martin Luther King and the Southern Christian Leadership Conference, or who is also supportive of the civil rights movement, decided to march anyway. However, when the marchers got to or made it to the Edmund Pettus Bridge, they said a short prayer, turned around, thereby obeying the court order and avoiding further conflict with law enforcement, which had happened just a few days earlier in a term called Bloody Sunday. So that's the history of Turnaround Tuesday. It actually has its roots in the civil rights movement and made its way into market vernacular. So if you learn nothing from this video, maybe you'll learn something about Turnaround Tuesday. All right, as we have been alluding to, we saw some positive movements in the market today. Canola saw $7.20 gains at 617.60. Minneapolis wheat saw 3.75 cents up at 567 and a half, or and three quarter, sorry. Kansas wheat saw 9.25 gains to 511 and a half. It looks like my Chicago wheat and my Kansas wheat are a little bit messed up here. I'll figure that out later. But let's just say all the wheat markets saw gains today. Actually, it was led by Chicago, seeing the largest percentage of gains, which was Chicago was up 1.9%. Kansas was up 1.8%. Soybeans were up about a cent today. There's still pressure in that soybean market. We'll talk about that in a second. Corn was up 4.5 to 426 and a quarter. Soybean oil up marginally 19 points at 49.88, still trading below 50 cents a pound. Canadian dollar was down 14 cents, giving back some of its gains yesterday, trading at 72.23 at the time of this recording. Live cattle lost a buck 47 at 238 and three quarter, and feeder cattle gained 85 cents at 360.75 a hundredweight. All right, let's take a look at the wheat markets first. So we made new bottoms, as we mentioned in our video yesterday in the wheat market, which was concerning. Today's turnaround is positive. I think I do feel like the markets are tired of selling. I think that farmers are tired of the markets moving lower. I think that farmers are generally the largest long holder of markets or of the commodity, and therefore they have a lot of sway. And when farmers don't want to sell, or they stop selling because the prices are terrible, or because the maybe because they've satisfied their delivery and sales needs for the fall in the short term. That can be when markets pivot. It's kind of feeling like we're getting towards that area at this point. I can't say that I'm calling a bottom here. There's still lots of risk in these markets. These markets are still trending lower for sure. But today did feel a little bit different in that regard. And, we are getting into periods of time where the markets tend to come out of their lows. Here is December spring wheat as well, same kind of thing. Actually, spring wheat held on to its support from back in the beginning of September yesterday, and then rallied kind of off that support today. It did make a new low, but that was in the overnights, and we rallied just mildly above above where we were yesterday, where we started off the day yesterday. Just wanted to put in a reminder here that, here's the seasonal chart for Minneapolis wheat. And I put the arrow here where the day is today. Now, these don't follow like exactly by the day, right? But the general patterns still kind of fit. So, as you can see, we generally see the lows, in the middle and end of August. And then we, kind of see a small rally and then another push lower. So what did we see here in wheat markets? We saw that come in into the beginning of September. We saw a very small rally and then another move lower. So it's possible that we're kind of still seeing this pattern play out, and we could be getting close to the bottoms of these wheat markets. So again, I'm not calling a bottom, but I will say this: anytime that I ever recommended sales into the harvest pressure season because everything looked bearish was always a mistake. And, generally the markets do get tired after some prolonged selling and do rebound. That doesn't mean they're going to rebound to the highs that we saw previously in the spring. But generally, into the late fall and early winter, we do often see markets turn around, a lot of the Canadian markets as well. One of the reasons that we might have seen for the wheat gains today was, Russian exports are not performing quite as aggressively as what some of the analyst firms in Russia and even the USDA have been predicting. Russia's weekly wheat exports from the Black Sea ports this week totaled just under 500,000 tons, which is down. By about 46% from last year. So it's not like the big Russian crop that we are talking about is currently getting dumped on to the market. And that might be something that gives the wheat markets a little bit of support. All right, let's move on to canola here. We also saw a bounce in canola. We did see a new lows posted yesterday. That was a concern. We are looking at the $600 level as, psychological support. However, we do have some here at 610 as well. Now, as we mentioned yesterday, this market still is in a very, downward trending channel, but we are getting, kind of to that point seasonally where we tend to find bottoms in the canola market as well. The harvest is ongoing. Farmers are already seeing that their yields are maybe a little bit better than expected, or at least maybe there's a little bit of padding going on in yields to make sure that there's no negative surprise that happens when they get into the fields. Lots of selling pressure happens before that, but we usually actually see the bottom before the harvest is often completed. That might be what's happening here. As you can see on this um, seasonal chart, we've kind of passed the normal area of where the bottom is, but we're still kind of tracking very near close to the bottom. So again, I'll just say anytime that I've made a strong recommendation to be making sales into this harvest pressure has often resulted in me having to eat crow later. So just wanted to keep that in mind here as we move through this harvest period, which is why we advocate so much for spring sales ahead of harvest, because we don't want to have to participate in the market dropping in through harvest and having to pressure ourselves into selling Octave delivery grain. All right, soybean oil hasn't fared quite as well today. It also is seeing continued pressure from the soybean complex. So that means that canola did rally independent of soybean oil today, which I think is a good sign for canola as well. Corn also saw some gains today. The conditions report in corn was lower. It's still above average, but overall, I think a lot of the negativity in the corn market was priced into the middle of August with the USDA recording record yields. They're still at a record yield position, but I think the market had priced a lot of that in through the month of August. I'm not necessarily confident that we're going to continue to rally from this point. I think that as the harvest comes in, there could be another push lower as the harvest pressure kind of gets into the large part of harvest. We're still below 20% harvested as at this point in the U.S. Similar thing with soybeans. We saw it drop off a lot recently. Soybeans continues to get hammered by the news in China, and then yesterday, one of the reasons why it pushed significantly lower was that Argentina dropped some taxes on their farmers, which is kind of promoting China to continue to buy from South America. And according to this Reuters article, China bought at least 10 cargoes of soybeans after this announcement was made. That's 600,000 tons, give or take, maybe a little bit less than that. That's a huge amount of soybeans. I mean, it's a noteworthy percentage of the soybeans that China sources in a year, and all of that means is that anything that China buys now um, is just basically being taken away from the USS&D. That's why the market is so concerned. Here's some charts as well from Farm Doc, a website called Farm Doc. In an article, they put together some really good graphics that kind of illustrates this. And here is the current July and August export totals um, for the U.S. or yeah, U.S. exports. The orange bars here are exports to China. The blue bars are exports excluding China. You can see that through the summer, like through the early spring and summer, there's not a lot of U.S. soybean exports done, period. But there is still some done in China, and it kind of comes out of the gate in September. But here you can see that there's no sales to China through June, July, and August. And and you can see here that as we move into the US, when the US gets flush with soybeans and lots of exports are made, a big portion of that is China in October, a big portion of that is China in November and even December. So this is worrying the markets because there is zero soybeans sold to China that could get exported or would have been exported during those Sepok Nav months. So that's where a lot of the concern is coming from. As well, here's kind of a way to look at it from the other side. This is the Brazilian exports. And as you can see through August, September, October, we generally see this fall off because that's when the US supplies are most plentiful. And when the Brazilian supplies are most plentiful is just after harvest in Feb, March, and so on. But you can see here, look at the difference between August 24, 2024 and August 2025. They have a significant difference in exports, although most of that growth has come from China. So we expect to see that continue into the September through November months as well. When we generally see that trail off, I think we could see much higher exports from Brazil to China in those coming months. Just to kind of illustrate as well, the trade dispute between China and the US, this is what that kind of resulted in 2018 when we saw trade war 1.0, I guess we could call it, is that only 18% of the share of beans sold in the United States went to, or China's share of United States and soybean Brazil exports. So during the first trade war, only 18% was China's share from the United States. And during that trade war, we saw 82% in from Brazil. So they've seen this pattern before, and I think it's more aggravated this year than the last trade war because now I think not that China didn't take it seriously last time, but I think they really are looking at this as perhaps a prolonged fight in the trade war 2.0. All right, if you're not subscribed to this channel, please do so. We really appreciate any subscribers. We appreciate comments on our videos and that as well. We like to engage with our audience. So thank you for joining us. We will see you again tomorrow. Have yourself a great day.